Hey, what's going on, guys? Aaron here. Welcome to the video. So, big news today. Morgan Stanley tells its wealth advisors they can pitch the Bitcoin ETFs, or two specific ones. So this is very, very big news. And I think this will be the next wave, the massive wave of adoption, which I'll cover in this video. Up until now, a lot of the Bitcoin ETFs, or the vast majority of the inflows from individuals, were not from advisors that oversee people's money, them telling them, hey, you should go ahead and get Bitcoin ETFs. They were individuals, like, for example, if I opened up a retirement account or whatever, a brokerage account, and I was like, hey, I want to go buy a Bitcoin ETF. So they were self-driven. They were not from outside advisors. And this is the first time that a big bank is allowing their advisors to pitch to certain clients. So advisors for Morgan Stanley can actively promote Bitcoin. So before, a client may have to come to them and say, hey, I want to go buy Bitcoin. And then they're like, all right, well, here are the options. We have the ETFs. Maybe there's some custodial service that we offer, but now they can actively promote Bitcoin. So why would advisors be actively promoting Bitcoin? I'll get to that a little bit later in the video, but taking a look at portfolios, it's really clear that people with, I guess, a higher risk, which I don't agree with, but that's what they say here, individuals with a higher risk should have an allocation to Bitcoin, hands down. I'll get to that a little bit later in the video. So as of 2023, Morgan Stanley, which is just one of many institutions that are going to be doing this, allow their advisors to pitch Bitcoin to their clients. Morgan Stanley has $1.4 trillion of assets under management. So if just 3 to 5% of that money hypothetically eventually comes to Bitcoin, which I believe it will, if not more, that alone could substantially move the price higher. So Morgan Stanley said they're only going to pitch these Bitcoin ETFs to clients with at least a net worth of $1.5 million, an aggressive risk tolerance, and people that have a desire to make speculative investments. So right now, which I believe it will 100% change, they are not telling everybody to go ahead and get Bitcoin, but I believe, again, that will change. And this is why it'll change. And I've covered this before in the past. It's worth covering again. So taking a look at, let's say, the all seasons portfolio, which is very, very common for investment advisors to recommend to their clients. And adding just a 1% allocation to Bitcoin would increase their returns from 53% to 68%. A 5% Bitcoin allocation would over double their returns to 144, and a 10% allocation would bring the returns to 269. So let's take a look at one other portfolio, and these are the conversations that people are going to be having. So let's do a classic 60-40 right here. This is going to be the SPY, S&P 500, and the Vanguard Total Bond Market ETF. So a very, very classic, standard, easy allocation here. Adding a 1% is going to jump it from 121% to 145, 5% Bitcoin, 261%, 10% Bitcoin, 456%. So this is why I believe that every single person will eventually have Bitcoin in their portfolio, even if it's just 1% for the most conservative, risk-averse people. 1% is nothing. And that can still have a massive, massive impact on somebody's portfolio. And this is a super cool fact right here. As of 2023, SEC registered investment advisors managed approximately $128.4 trillion in assets. So SEC RIAs, registered investment advisors, managed $128.4 trillion. So that is, some would say, the next or a possible addressable market where advisors whom individuals trust to manage their money will say, hey, let's get a 1% allocation to Bitcoin. Let's get a 5%. Let's get a 10% if you're younger and maybe want to be riskier. A lot of us watching are like, 10% is risky. Are you kidding me? But anyway, for most people, I guess 10% is risky right now, right? I do think that will change, especially as investment advisors become more educated, probably self-educated about kind of like what I just showed you. What actually is Bitcoin and how much does it affect somebody's portfolio over time? But this is really important because advisors can have financial incentives to recommend a product. They may make fees when somebody buys the product. So different advisors have different commission fees or how they make money. Some just make money basically on the assets they manage. Others can make money like an upfront 0.5%, 1% on a buy order. I ethically think it's better if people just make money over the assets they manage, but that's not the point of this video. But I'm saying that because this $128.4 trillion will soon have advisors saying, hey, we should get you into Bitcoin investment funds or into ETFs or whatever. And they will possibly, some of them, not all of them, but some of them will have an incentive, a financial incentive to do so. But even if the incentive is like, hey, my clients are going to make money and I make a percentage off of all the money that I manage, so it's in my best interest to grow people's accounts, right? That is the more kind of ethical way that advisors can manage people's money. And I think that'll happen. So this is very, very good news. I'm sharing this right now as Bitcoin dropped, 7-8% today or something. And there's a lot of speculation about, oh, we're heading into a recession. No, we're not heading into a recession. And at the end of the day, I think Bitcoin is a long-term savings vehicle. So what happens in the short term, I really don't care. Is it fun to watch the number go up more than number go down? Yeah, usually. But for a lot of people, it's buying opportunities, and the global market will do what it does, and Bitcoin will stay. And over time, it will continue to go up. At least that's my opinion. So that's it for the video, guys. Hope you enjoyed. Take care, and bye for now.